Hey everyone, we all know that mortgage rates can change fast, daily, sometimes even hourly. So locking in the right rate can make a huge difference in how much you pay over time. So today we're breaking down when to lock in your rate and sharing some of these tips to help you get it right. Hey, look, before I forget, if this topic interests you at all, locking loans and when to lock, there's a link down below to a blog, and on that blog there's going to be a download for the free ebook all about this topic. So go ahead. And while I'm at it, if you're not a subscriber, please subscribe, hit the subscribe button down below. And by all means, like this. So, if you enjoyed the content, just hit the like button. Let's get back to it. Hi, I'm Joe Harris from Morgan Financial. I'm here with my friend,
Lindsay Clark.
What's up, Lindsay? How's it going?
Good. How are you, Joe?
Good. I see we're both wearing blazers today.
We are. I feel like we can create a national holiday.
It's
wear your
day.
favorite blazer day.
Yeah, I'm just doing this because I have some stains on my shirt. I'm not going to lie.
Way to call it to attention.
Yeah, oh gosh. So if you see anything on my shirt, that's why. Let's get to it.
Yeah.
So how are you doing? What are we up to today?
Doing great. We are talking about when to lock in your interest rate. This topic keeps coming up specifically because rates are ever changing,
Yes.
like you mentioned, sometimes daily.
Sometimes hourly.
Sometimes hourly. That's terrifying
Multiple
to
times
some.
a day. Right.
So with that being said, let's go right to what is rate locking?
Okay, that's a really good question. I know I'm really bad at answering the question you ask sometimes. So let me start here. What are we talking about here? We're talking about locking in your rate on your mortgage, right?
Correct.
So that's based on a market. Lenders, they do give out rates, but those rates are based on a secondary market. Not to get too complicated, but they're based on a whole nother market and what that market is doing. It's like the stock market. It goes up and it comes down, right? Mm-hmm. Sometimes it trends up, but it goes up and down, and then sometimes it trends down and it's going up and down. It just goes down more than up when the rates are trending down, and it goes up more than down when it's trending up. Mm-hmm. So not to confuse people, but the rates do change, and it's not because lenders say, oh, I want to give you a different rate today. It's based on a market that they get those rates from.
So it's not the lenders making that decision.
Well,
it's kind of just a reaction?
It is a reaction of sorts, and they do make the decision to raise the rates, but they can make the decision not to raise rates if rates are going up, but then they would lose money by doing the loans, and then they wouldn't have an incentive to do the loans.
Right.
So they want to keep market rates in order to basically stay in business. It goes way deeper than that, but just know that rates react to a market that changes on an hourly, daily basis sometimes. Sometimes it doesn't change for a week. Sometimes it changes every hour. It just depends on the market.
Right. Well, mentioning those time frames, that kind of brings me to the next question. How long can you lock in a rate?
Well, I didn't answer your last question, to be fair. So you said, ask the question again.
Okay, so it was, what is rate locking?
Rate locking. Okay. So when you lock in a rate, like as a lender, when we lock in a rate, we're promised delivering that rate at closing for the borrower. And if it's a 30-year fixed rate loan, it's going to be the rate that you have for the duration of that loan, for as long as you have that loan.
Right.
If it's a 30-year fixed rate loan and we lock in your rate, typically that gets done, at time of application. Mm-hmm. And when we lock in that rate, that's the rate you're going to get at closing. That's the rate you're going to have through the life of the loan, if it's a fixed rate loan. Now, if it's an ARM, there's adjustable nature to the loan that I don't want to get into on this conversation.
It's the Wild West.
But if it's a fixed rate loan, the loan you lock in at closing is the loan you're going to have for the duration of that loan for the most part.
Understood.
Yep.
All right. So now's the timing
question.
piece. New question.
Yep.
All right. So how long can you lock in a rate?
So typically you want to lock in a rate to get you through closing. If you're looking to borrow money and do a loan, you want to lock in that rate to at least get you through closing. Because if the rate expires and you haven't closed yet, well, that's going to be a problem. You don't have a rate.
So is it like the length of a contract? So most contracts
Typically.
are around like 30 days.
Right. So your question was how many days? Man, I'm really bad at answering your questions.
Well, I'll just bring you back to it.
Thank you. So yes, if the contract's 25 days, you want to do enough to get you through to closing and probably a couple days to pad it.
Yeah, just in case.
Just in case that something happens, maybe the seller can't get out. Maybe you there's some kind of something that holds it up. Who knows?
Inspections,
who knows? But maybe, give it a couple days grace. But, that's going to be where a really good mortgage loan originator or loan officer comes in to help, they're going to help you make that decision. Mm-hmm. But you can lock a loan 15 days, 30 days, 45, 60. There's even loans that will lock up for a year.
Oh, wow.
But obviously there's this thing called time value of money. Mm-hmm. The longer you lock a loan for, the more it's going to cost you. It's either going to cost you in the form of a higher interest rate or it's going to cost you in the form of more money up front.
So speaking of like the timing of it too, so let's talk about the big question. When is the best time to lock in your rate? And how does that timing play into the home buying or refinancing process?
Well, I'm going to key in on one word that you said there is timing.
Yeah.
All right. And if you've ever heard the phrase, don't try to time the market, I don't know. Some people think they can time the market. If I knew what was going to happen tomorrow, trust me, I'd let some people know and I'd make a ton of money because of it.
Right.
The reality is no one knows what's going to happen tomorrow. The pro is when you lock in a loan is that you're guaranteed to get that rate as long as you close within that lock period. And sometimes you can extend the lock if for something happens, unforeseeable, then you can extend the lock. There might be a fee to do so depending on the market. But at least if you close within the lock period, you're going to get that rate for the duration. Now that's the pro. When you lock in, you're guaranteed to get that rate if you close during that lock period. Now, the con is, people say, what if the rates go down?
Yeah.
What do I get then,
Yeah.
right? So timing the market, you're taking the risk away from the rates going up, the downside.
Right.
So this is the worst you're going to get, right? Now, people ask me all the time, what happens if rates go down? I go, well, what if they go up? Well, I'm protected. Yes. If you go down, yes, there are some programs, some lenders that have a float down or renegotiation of that lock period, of that rate based on market.
Right.
So there is an opportunity sometimes to float that rate down to market or close to market, depending on a cost or fee, depending on the lender. I'm talking in generalities.
Right.
Right. There might be a fee or a cost to float it down to market rate. And typically the lender has to benefit you by 1/8 or 1/4% in the interest rate. But we do see that happen from time to time. But the reality is that rates tend to float down. Like think about a feather and they shoot up and then they float down.
Yeah.
It's like if you looked at gas prices. Okay. If you ever looked at gas prices, you rarely ever see gas prices like jump down.
Yeah.
But you see them jump up, don't you?
Sure do.
Kind of like that with rates.
Gotcha. Yeah. So is it safe to say it's a little bit of a gamble?
I always ask my clients, like, do you like to gamble? They're like, what do you mean? Well, if you don't lock in your rate, you're telling me that you know better than the market.
Right.
And I don't know anyone who knows better than the market.
Yeah.
The market doesn't even know what it's doing tomorrow. And some people, there might, if they have a longer horizon or a longer time frame, they might say, look, I'm willing to take the chance because I got a lot of time for that to go up and down. We'll see what happens. But sometimes the market just gets worse and worse and worse, regardless of what popular belief is. Like I was on the thought process that rates should be coming down now. But there's data that's coming out that suggests rates are coming up, right? So it's hard. You cannot time the market. Don't try. If you like what you see in front of you, I always tell people, lock in. If you're comfortable with that payment, lock in. If rates go down significantly, I can help you float down to market. If rates go down significantly after you close, well, we can refinance you after a certain amount of time. There's a cost to doing that.
Yeah.
So we're going to look at the cost versus the benefit to help you make that decision.
Yeah.
When the time comes.
Speaking of that float down, what kind of wiggle room is there for you if you did miss out?
When you say miss out, do you mean like the rate's just not what you thought it was going to be?
Not what you thought it was going to be. It did go down. What type of wiggle room are we talking?
It depends on how much it goes down in the time frame. It depends on the lender you're working with, the loan product, the program, the term, all these things. But if you locked in at 6.5%, I'm just speaking theoretically, if you locked in at 6.5% and rates are now 6%, you're going to have a lot of wiggle room to float down to market.
Gotcha. Well, final considerations before locking. What advice would you give consumers, anyone looking to lock their loan and get a mortgage?
Okay, there's more downside risk than upside risk to floating your loan. Floating means you're not locking. Floating says that you're going to wait to lock your loan until you feel comfortable and ready to do it.
You're a gambling man.
You're a gambling man or woman, right?
Yeah.
I'm not a gambling person. I mean, I've played blackjack here and there, but as a rule, I don't really like to gamble with my money. It's hard enough to make,
Yeah.
But the reality is that if you're looking to play the market, that's what you're doing. You're speculating or you're gambling because you don't know what's going to happen tomorrow. Just because it goes up 10 days in a row doesn't mean it's going to go down on the 11th day.
Yeah.
People are like, well, we're bound to have, this is gambler speak.
Right.
We're bound to have a good day and it's going to get better. Maybe it will, maybe it won't. I've seen rates go up for a long period of time and not come down for a while. We've been playing in that realm for the last 2.5 years or so.
Right.
So my number one advice is if you're comfortable with the repayment at the rate that's in front of you and you're confident that it's a good deal based on today's market, then lock in and you've locked in your risk. You know
Yeah.
you know your risk, and that's really the best advice I can give is that I wouldn't leave a loan out there unlocked for very long, hoping that the rates come down.
Right.
And typically, a lot of lenders can float you down to either a full degree or some degree if the rates consistently or significantly improve.
Gotcha.
So lock them if you got them.
Of the
take
locking
away the
mindset.
risk. It's one less thing you have to worry about.
Yeah.
You know, there's enough things to worry about when you're buying a house. You know, you're worrying about moving. What am I going to do with the house once I get in there?
Mm-hmm.
You know, this loan process shouldn't be difficult, but you can make it stressful on yourself if you hold out on locking that loan.
Yeah. Solid advice. Well, that's all I had for you today.
Oh, cool. Well, thanks for watching today. If you have any questions on when should I lock, you know, what should I look for, and any tips, tricks, whatever, reach out to us anytime. We have some contact info down below, and we'd be happy to help you in any way, shape, or form. If you have an estimate from a lender that you just want us to take a look at and say, hey, Joe, is this a good deal or not? I'll look at our pricing and tell you if that's a good deal or not. And so any way we can help you, let us know. Thank you. Like, share, subscribe, and we'll see you next time.